Good morning to you, Steve. It's good to be back. Well, I think you're right. It has been a very strong quarter. You already mentioned some of the numbers, $18.7 billion in cash flow from operations. That is actually a bit more than $4 billion going out in terms of working capital. So the underlying cash is even stronger. So yes, indeed, we have a challenge on where to allocate the money to, and we allocate it for value. And where we see most of the value at the moment is buying back our shares, which are undervalued. So that's why we are announcing a $6 billion buyback for the quarter. And we are saying, well, if these conditions persist, then subject to board approval, of course, we will be returning more than 30% of cash flow in the fourth quarter as well. But at the same time, Steve, indeed, you're right. We can also consistently bring down our net debt, which is an important factor. And we remain disciplined in capital, so no more than $27 billion for the year.
And you know it's going to happen as well. There's going to be certain parts of the press that are going to look only at the numbers and say, is this right, this kind of profitability at a time of such global strife that you have noted very well, Ben, as well. Is the UK government or other governments right to try and claw back some of that in tax rather than allowing it for shareholders?
Well, Steve, of course, taxation is a matter for governments, not for us. But let me just put a little bit of context around the numbers as well. So if you look at the oil price for this half of the year, it's the same as the oil price in the first half of 2013. And if you then look at what we have done since 2013, we have significantly improved our portfolio. We divested more than $80 billion worth of assets. We've been very disciplined when it comes to capex, 39% less capex than in the first half of 2013. And in the meantime, we absorbed BG, by the way. And the same is true for OPEX. So 11% less OPEX while eating inflation and while eating the OPEX of BG as well. So a lot of hard work to make the company a better company. So yeah, of course, when then oil prices come back to where they were in 2013, you see stronger results. That's not a windfall. That's the result of a lot of hard work.